Welcome to App Talk with Upptic, where we dig into the nitty-gritty of how to grow apps and games. We speak with industry experts about specific strategies, tools, and tactics we use to find success, and we keep you up to date with emerging news and trends in the ever-changing games, marketing, and technology ecosystem. My name is Xander Agosta, Director of Marketing here at Upptic, and joining me today is
Warren Woodward, co-founder of Upptic.
Thanks for joining us, Warren. No guest this week, but we have a lot to cover. So
our guest is an extra helping of news today. There's so much going on this week. It's crazy.
Yeah, we're going to fill up like the whole episode just with news. So one quick plug at the top, we're doing a webinar on Web3 games growth, where we have a bunch of awesome guests. Warren, do you want to talk through the guests?
Yeah, we have a crazy panel for this. Some of our favorite people in the space. So we have Jiho, aka Jeff, the co-founder of Sky Mavis and Axie Infinity. He's always awesome to talk to. And then we have Yusuf, who's the CTO of Animoca Brands. And then finally, we have Megan, who is the COO and co-founder of Arrivant, one of our favorite up-and-coming Web3 developers. So we think this is going to be an awesome panel. It's the second Upptic only webinar we've done. So we always get little butterflies trying to do these things on our own, but we're just got a stacked panel of guests, and we think this is going to be a great one.
Yeah, and we'll have a link to register. So the webinar is October 12th at 8 a.m. So you PST. So you have a lot of time to register, and there'll be a link to register in the article and in the show notes. So please let us start boosting our numbers. All right, so our first section is Industry Insights, where we do a deep dive on industry news. Like we said, lots of news to cover at the top. Warren, you want to go first?
Yeah, so this one just came out. We have the FTC suing Kochava, mobile MMP Kochava, for selling sensitive location data. So for a couple of quick poll quotes on the situation, the Federal Trade Commission sued data broker Kochava for allegedly selling information that would allow for individuals' whereabouts to be traced to sensitive locations. The agency claimed it was possible to use the information to trace consumers to reproductive health clinics, domestic violence shelters, and places of worship. The FTC claims Kochava was aware of this potential use, marketing its services on the Amazon Web Services marketplace with the suggestion of using its information to map individual devices to households. Wow. Okay, so for some clarification, for anyone who is a paying MMP customer of Kochava, you can take a breath for now. This does not affect you. So let me kind of first clarify where this data is coming from. Our understanding that this is not related to Kochava's paid MMP product. Instead, it's related to another service they have called the Kochava Collective and their free app analytics product. So if you're using their free MMP, you do have some reason to watch this and be concerned. So I dug and found some fine print on Kochava's own website. So I do want to read that now to kind of clarify in their own words how this information is used. Okay. Free App Analytics, powered by Kochava, provides a no-cost attribution and analytics solution to tens of thousands of apps worldwide. In exchange for free service, FAA clients grant a first-party data license to the collective, contributing premium data directly through the integrated FAA software development kit in their app. The FAA SDK touches more than 1 billion devices globally, offering valuable insights into in-app activity, device attributes, app affinity, and more. The Kochava Collective does not include any data from enterprise Kochava measurement platform customers, aka paying customers.
Right.
Collective data is stored independently from the marketer's operating system, where enterprise customers measure and optimize their campaign activity across devices and channels. Kochava does not share or license the data of its enterprise customers. Okay, so we have the classic saying here realized: if you are not paying for the product, you are the product. Xander, what do you think about this news?
Yeah, I mean, it's kind of a bombshell. The funny thing is, they're very clear and upfront with what you're doing. If you're using this free product, you are saying you're going to let them use the data. The issue is, I think most consumers don't get that same level of disclosure, or is not clear to consumers that when you download an app that's using Kochava, your data is being freely sold, literally sold. It was on the Amazon web store. So an interesting component here is trying to figure out what exactly of the FTC is going after, because people are tracking personally identified information and using it in business scenarios all the time. What it seemed to be the thing that they were honing in on here is the fact that you have really, really personal data like health data, religious data, and then it was freely available with basically no vetting at all. And so one of the examples they
And
used,
maybe just for some clarification here, Kochava, don't sue us.
Mhm.
It's not that there's data on what religion someone is. It's that there is location tracking data. So the accusation is that you could deduce from someone's movement patterns if they went, say, from their home address to a mosque back to a home address, you could infer what someone's religious. And similar with the reproductive health, addiction recovery issues,
right.
and things like that.
And yeah, one of the things that they sort of pulled out as an example was the fact that you could go onto their website and request a sample data set, and they'd give you something like 61 million records timestamped with personally identifiable data tied to a unique device. And it was basically very easy to get access to this data. And so when I sort of dug into what they were actually going after, I think it was the combination of the personally identifiable data and how easy it was for anyone to get access to it, which is really what they're coming down on. Because to be clear, like this type of data tracking happens constantly within closed ecosystems, but they're drawing some delineation with, that it's personally identifiable and that it's being sold. And it's not super clear to me. I'm not an FTC watcher. I don't really don't have the best understanding of this. But that seems to be the one thing. But regardless, it's like a very, very bad look for the industry overall.
Yeah, no doubt. And I was just thinking about some of the irony of the situation is, it's no secret that the value proposition of the mobile measurement providers is diminished in light of Apple's privacy restrictions. And when the value of that offering is diminished, it's an onus on these companies to expand their revenue streams.
Yeah.
And I don't know that the timing of I don't know the history of the rollout of their free product and the collective, but I would assume it's become a more important revenue stream for Kochava as the value of their MMP product is diminished. So in a sick way, like Apple's own moves to protect user privacy have led directly to more aggressive offerings of user level data from companies like Kochava,
Right.
allegedly.
Allegedly. Well, speaking of Apple's sick moves, our next article is a political piece called Apple Faces Growing Likelihood of DOJ Antitrust Suit. Here's a quote from the article. Justice Department lawyers are in early stages of drafting potential antitrust complaint against Apple, a sign that the long-running investigation may be nearing a decision point and a suit could be coming soon. Still, the Justice Department has made no decision whether or when to sue Apple, the world's most valuable public company, and it is still possible the case will not be filed. The Justice Department has been investigating Apple since 2019 over allegations that it abused its market power to stifle smaller tech companies, including app developers and competing hardware makers. So to be clear, this is a leak from within the Justice Department. There's no official statement. They are not saying that there's a suit now, but they're saying that they've been doing this investigation for years, and they're indicating that potentially a suit will be coming down the line, potentially by the end of the year, is what the article said. So here's some Xander's take on this. Like, let me be very clear. I view Apple's behavior over the previous years as clearly anti-competitive. Its privacy policy framework is biased towards its own products, and their own products enjoy a special status of being promoted within their operating system and being asked to operate in a completely different set of rules than their app competitors, people like Facebook and Google and all these guys. Well, Google it's a carve out, but Facebook and most apps. They use their technology to kneecap ad networks, analytic providers, game and developers, and to consolidate and their games developers. So basically every component of the ecosystem, they've been able to use their tech to make those people have less granular analytics and be less competitive, and then they consolidate the value into their own ecosystem. And the number one way we can point to this is like their search product, their advertising product for search operates on a different set of rules than scan, which is what everybody else has to use. And so they're clearly biasing their own products. So Apple's a top tier target for a lawsuit, and it's justified. And I really hope that the lawsuit is pressed and they're found guilty in some form, and they're either compelled to compete on an unbiased matter against the other products in their ecosystem. So for example, not having pop-ups within their core operating system, which push Apple Music when Spotify is not able to do something comparable. That's one example, but there's a ton of examples that happen within their ecosystem. Or they're required to abdicate themselves from competing within their ecosystem. And I think long-term, like the FTC needs resources to focus on large companies to make sure that, specifically large tech companies, to make sure that they are not biasing themselves when they are marketplaces. So I have the biased opinion here. I work on this very closely, but I really think that this is really important that something happens here. Warren, what do you think?
Yeah, I mean, I think you summarized why this is a legitimate, potentially a legitimate suit if it happens, and like the real concerns of, you know, the power that Apple has amassed. Like, don't get it wrong, like Apple is an amazing company, they make amazing products, but the consolidation of power within, you know, within their ecosystem, at some point there has to be a system of checks and balances.
Right.
The thing that I'm personally most closely watching, just because, you know, our day-to-day is as game and app marketers, is, you know, Xander, you alluded to this with their search product, but there has been a lot of hints and new job postings related to Apple expanding their ads offerings.
Right.
And I think there's going to be an interesting tension between them. You know, on one hand, they can capitalize on a granularity of data for advertising now that none of their competitors can. At the same, on the opposite side, like that would be a clear mark against them in a case like this of doing something that's clearly anti-competitive.
Yeah, another point, like another clear mark, because they already
Right,
have
right.
so many. Right? Like
So something like this may slow down their ambitions of launching additional first-party ad offerings.
if they
I
actually
think
get
that's,
sued, right?
yeah,
I think
yeah.
until they get sued, I don't think they're going to stop. Like it's clear they're just sort of like this plan has been put into place for years and is like slowly rolling out and like trudging Apple way. And you know, it works. I mean, look at them, most valuable company, most valuable publicly traded company on the Nasdaq. So
Yeah,
here,
so let's keep it going. There's so much news today. This is another spicy one that came out in the last few days. So former Machine Zone founder and CEO Gabe Leydon, his new company Limit Break has raised $200 million to make a new kind of blockchain game. This is a VentureBeat article by Dean Takahashi that we're quoting for this pull quote. Gabe Leydon was a pioneer of free-to-play mobile games at Machine Zone, which was sold for $300 million in 2020 to AppLovin. Now he's back with Limit Break, a blockchain game company with $200 million in funding. And then they have a quote from Gabe that said, "Our focus is on what I believe is going to replace free-to-play with something I call free-to-own games."
wow.
Leydon is not sharing his full plan yet, as he doesn't want others to copy him. Okay, so that's just a quick quote. I recommend everyone check out the article for a little more context and some more quotes from Gabe.
One interesting thing is we were trying to find the valuation before this, and we couldn't find the valuation. So 200 million on what valuation? Unknown.
Yeah, it's kind of crazy too. I mean, Machine Zone, you know, there was a period of time where they were the clear top dog of mobile game companies,
Yep.
and while at the time of the sale, they were not, they were a little past their heyday. I mean, it sold for 300 million, and
Right.
this company that's essentially pre-product. I mean, the only product they've
Yeah.
launched is a couple thousand piece collection of anime girl
Right.
NFTs. Not to besmirch them, but it's just more to kind of speak of what do the investors expect out of this company? You know,
A
if
lot.
they're fundraising 2/3 of the final sale valuation of Machine Zone
Right.
for essentially a pre-product, at least pre-gaming product company.
Yeah.
This is going to be an exciting one and a spicy one to watch. I really hope that I'm sure there's more to Gabe and the team's plans here. What rubs me a little bit the wrong way is, you know, this kind of word salad of calling free to own for this idea of giving free NFTs to a gaming community. And this has existed for a long ass time. I mean, one of our partners we're working with right now, Arrivant, their gaming universe project Loon, the collection we're helping them launch right now is an entirely free collection that's essentially, you know, intended to onboard people into their gaming ecosystem.
Well, Warren, wasn't
Go ahead.
EtherOrcs also, which is one that you've been playing forever? You got their
Yeah,
EtherOrcs for free, and you've been talking about that for a year or so or longer,
exactly.
right?
Yeah, one of my favorite game communities, EtherWorks, was completely free mint as well. Like, there's tons of precedent for this. So I don't know if there's more to this that, you know, Gabe is going to reveal later on, or if he's just candidly not deep enough into the space to kind of know what's already been done and what people are doing right now. And this is not to besmirch Gabe. He has accomplished amazing things in his career. Gabe, if you're listening, which you're probably not, we would love to have you on the cast to do a deep dive. I tweeted at you as well. Hit me back. But yeah, this is going to be a company to watch. Just the brute force that Gabe, and I'm sure there's going to be a lot of ex Machine Zone people that join the team. They will make moves here. Will it be successful? Will players love it? No idea, but they're going to make moves.
Yeah, I mean, if you think about what Machine Zone did really well, they had the really deep monetization. They were those 4X games, right? That was their whole bread and butter. 4X games with Arnold Schwarzenegger, God of War, and all that stuff.
Game of War.
Game of War, sorry.
Yeah.
God of War is very different. And they really, I mean, those games had incredible spending depth. I decided I was going to play one of them at one point just to understand it. And I think I spent a couple $100 in it within a few months. And I was like, that was like, you could spend 2 or 3 or 10x that, maybe more, maybe like 100x what I spent, reasonably easy to dominate a server in those games. So like what they do have an understanding of is what a whale looks like. And it's very clear that there's going to be a huge component of who makes money for Web3 games that are whales, because people who are really deeply invested in these assets that are now tangible in a way that they weren't before. So they do have a good understanding of how to target whales. And so that's, I think, the bull case is that this is a company, or at least the leader, with whale targeting in their DNA. That is something that will be relevant to a huge swath of Web3 games ecosystem. And maybe that justifies this raise of this valuation. We'll see.
Yeah, I was just going to give a little bit more context on, this is something that was talked about in the article, but not necessarily in the poll quote of like what they're actually explaining the business model would be here. That I think the idea that Gabe has expressed is we'll identify like our likely whales and advocates, give them a first batch of NFTs that's free to kind of jumpstart the gaming ecosystem. Then this same or similar NFT ecosystem will be sold directly from Limit Break to future players. Now that it's essentially like a bootstrapping mechanism.
Yeah.
But it's
For more on this,
equivalent
hire
NFTs.
Upptic, because we do this currently. Anyway, any other thoughts here before we move on to the next article?
I feel like Limit Break's going to be in every other news episode for the next year for us. It's just a feeling that I
well,
have.
it's like
Let's see how it
Unity or
goes.
AppLovin or any of the companies that we just cover at nauseum. Speaking of companies we cover at nauseum, I like that transition. CNBC article: Snap shares pop on plans to cut 20% of staff as part of major restructuring. I actually think they have not. They've dropped again since this article was written because the market got crushed this morning. Here's a quote: Snap will lay off 20% of its staff, more than 6,000 employees, and scrap several projects, including its Pixie photo-taking drone and Snap Originals premium shows. I didn't even know they were making premium shows. Snap recently, maybe that's why. Snap recently reported a disappointing second quarter earnings and said it would not provide guidance for its current quarter. Here's a quote from the CEO, Evan Spiegel. While we have built substantial capital reserves and have made extensive efforts to avoid reduction in the size of our team by reducing spend in other areas, we must now face the consequences of our lower revenue growth and adapt to the market environment. We are restructuring our business to increase focus on our 3 strategic priorities: community growth, revenue growth, and augmented reality. Okay, so this should not come as a particular surprise. It's more pain from the tech sector. Snap's business has been reasonably stagnant in terms of user growth over the past year or two. And they were one of the first to say ATT and Scan was not going to affect them. And then they went and had to revise back and say, actually, this is going to crush us. And then it actually did crush them. And they've had several earnings calls where their earnings reports were so bad they dropped 25%. I think it happened twice. It's like basically kind of a meme about the Snap stock. But while it is a solid product, very innovative, my sister swears by it. She loves it. She's a little younger. They don't have the same moat that Facebook and Google do, and so they're actually having to slash staff in a way that those companies weren't, where they just slowed hiring. But it's a smart move. I mean, a lot of the companies who have a good business but just have to adjust to a new growth environment are preparing the company for the long haul. So I think it makes sense. It's just a little bit brutal. Warren, do you have any thoughts here and sort of, is your perspective as someone who does a lot of UA, what is your perspective on Snap's ad product recently?
Yeah, I mean, to state the obvious, like, it's brutal for Snap employees, especially in the current job market in tech. So our heart goes out to anyone who is affected by this. This is probably, in my lifetime, the worst hit I've seen overall to like the gaming and tech sectors.
Yep.
As far as like, is this surprising? No, I mean, this is the dead horse, but we still, every week we see another repercussion of Apple's changes in their tracking and how this affected the mobile advertising industry. The reason that it's so magnified for Snap, if you think about a business like Google, Facebook or Meta to a lesser degree, ads are a meaningful part of their business, but it's not their 100% of their revenue stream. And specifically, mobile ads aren't 100% of their revenue stream. But for Snap, to the best of my knowledge, they have no other revenue stream beyond mobile advertising. So they're going to have some of the most outsized impact from Apple's privacy changes. And so
I also think that
I
just
think it was inevitable.
sophistication, though, right? So like that's part of it, right? But because like both of those companies do make most of their money on advertising, and mobile is a huge component of it. But I think more is like they just weren't as sophisticated. They don't have as big as of a reach, and they aren't able to like create their own ecosystem in a way that both Facebook and Google are. And I think that's really the critical component that is giving that they're like it's causing them so much pain.
Yeah, it's interesting. This is a bit of a tangent here, but I'm just thinking of Google's ad platform, when they lost this granularity of data for iOS, their pivot was, well, we're just going to estimate how many installs we think we brought you, and we're just going to go, but like we'll make the rules here. We'll tell you how many players we thought we brought you. It's which has in our testing has not lined up at all to reality. But not every advertiser is looking at it and doing that kind of auditing. Like if you just believe, if you just believe Google's own dashboard, you might think that your iOS marketing is doing a lot better than it actually is. But we didn't see Snap, do any kind of play like that. I think they haven't really had a meaningful strategy to adapt to these changes in iOS.
Well, they traditionally had a lot of brand marketers. That was sort of their bread and butter. That really originally was like you do direct media buys from a salesperson, and then they sort of pivoted to they have a platform. But most of these people, like their ROAS reporting, never actually was actual ROAS. It was always day over day ROAS, revenue over ad spend, which is not what ROAS actually is. So like their target market was actually just not performance marketers. And so as we see marketing budgets being slashed across the ecosystem, brand goes first and performance goes last. And so that's, I think, what you're seeing the pain from here.
Yeah. So up next, let's talk more changes in advertising opportunities. That was a bad segue, but I'll do my best. So
we're working on it.
Up next, this is other more pretty breaking news here. So from Ad Age, we have that Netflix's ad tier will include limited targeting and no third-party measurement. So as a reminder, the Netflix ads-driven product, which I think, is it free or reduced price? I'm trying to remember.
It's reduced price. I think it's still
reduced
like $8
price
a month or something. Yeah.
Got it. Yeah. So from this article, the streaming giant is asking for a $60 CPM, which is
that's crazy for
really
people who don't know.
expensive. Yeah, really expensive. Typical performance marketing CPMs that in our portfolio that we see common buying at is maybe like $5 to $10 range.
Yeah, like really good ones can be like double digits, like low double digits.
Yeah. And Netflix is also guaranteeing at least 500,000 subscribers for its ad tier at launch. Netflix is also not expected to have third-party measurement to verify its audience metrics or even provide them. One media buyer said they will have impression counts through the Xandr platform. That's a name that's been coming up a lot lately, but that Netflix currently doesn't have the capability to share reach and frequency data for campaigns. So not only do you get to pay about 6 times market rate for your advertising through Netflix, they also won't tell you what happened.
Wait, so there's, I don't know. So I haven't done a bunch of deep dives here, but like, what about attribution data? Are you able to are they going to tie back performance metrics back up to the campaigns? It said no, like they were not getting any performance data?
Seems to be, if this article is correct, that seems to be what they're saying, at least at launch.
Dude, are they gonna? So here's my question: are they gonna get shellacked because this is so freaking stupid, or is there enough people who are doing brand targeting that it doesn't matter, and they have enough brand that people will just pour in regardless?
So my first thought in comparison here was this kind of I haven't bought ads on Twitch for a while because their product was so bad for this early on, but is very similar to trying to do any kind of measured performance marketing on Twitch. Like the targeting was super limited. The CPMs were exponentially higher than any other traffic source, and it was clearly just targeting people that valued, I want to see my product on Twitch, and I think this going to be the same thing. It's a subcategory of brand advertisers that's a little more clout focused than
Okay.
performance focused.
Very
So I
kind of you
think
to
that's
say it
what
that way.
they're. But I mean, I'm not going to
So,
be buying this. We're not going to
well,
be buying
well,
this
so
for our
here's the
clients.
thing.
Like, yeah,
Like,
go
let's look
ahead.
at the Snap, right? Like we just looked at Snap. They're getting crushed because they target brand marketers. This
Mhm.
product is 3 years too late. If this was two
Mhm.
and a half years ago, in the like deep into the UA arbitrage wars and frenzy, people would come here because they're looking for any incremental source on zero interest rate loans, right? But now we're in an environment where people are slashing band spend across the board, and you're having a real hard time even doing really targeted performance marketing. I don't see how this moves the. I mean, I don't know the Netflix business model very well. They'll definitely get buyers, right? But I don't see how this becomes as a media buyer, as someone who does user acquisition. Like this is so unappealing. Like
Yeah,
and how
especially
can it move the needle? Like we'll see,
this,
we'll find out.
the space is evolving quickly too. So we had, I think it was a couple months ago, we had the founder of Vibe, which is
Right.
basically, more of a performance-based DSP style platform for buying connected TV inventory. So like this model can work, the Netflix model, if there is no better alternative.
Right.
But we already have better alternatives that are coming to market showing proof of concept.
Well, and the MMPs are also
Yeah,
getting more sophisticated here. I'm not calling it by
exactly.
name, but the MMPs are actually really investing in this sort of connected TV technology so you can measure attribution. You need that. And they're saying explicitly they're not going to have it. And the other thing to remember is Netflix just lost its crown as the preeminent streamer in the ecosystem, right? Disney passed it, and given it's across all their platforms. But I mean, Hulu is one where you can do targeted advertising. And I know they're doing a lot of attribution integrations with Hulu. So it just like I get they have to do this because they have no other growth lever, but it
Mhm.
just seems like they're doing it so poorly. And we'll see. I mean, maybe I'll eat my words. And the other thing is maybe they'll figure this out, and in 2 years they'll have the attribution that they need in order to make this competitive. But it seems like at least at the launch, it's not going to be competitive, from what I can tell.
Yeah, I mean, don't get me wrong. I think they have the ability to make an amazing marketing platform for this free tier. But it's clear that like the DNA of this first version of it is, not in line with what any kind of performance marketer would actually want to see.
Yeah, well, and just the fact they're outsourcing it just seems so strange to me. But I think it's because they had to get to market so quickly. That's what my assumption is. Okay. Any other thoughts on the Netflix piece before we move on?
No.
No, great. This next one, and our last one, is a article from Sony, the Sony blog, which is entitled "Welcome Savage Game Studios Plus Expanding Our Community." So I just got a really small pull quote from the article. Today, we announced that we have entered into a definitive agreement to acquire Savage Game Studios, a hugely talented team of creatives with many years' experience making some of the most popular mobile games enjoyed by players around the world. So that doesn't say a lot, but basically, Sony said that they're going to purchase Savage Game Studio. Now, they haven't announced a price for this acquisition, and Savage Game Studio has no commercial products. And so, what is this at its core? This is.
And who is Savage Game Studio?
Do you want to explain who Savage Game Studio
Yeah,
is?
well, I mean, friend of the pod, Miska from Deconstructor of Fun. This is his game studio.
Right.
So, I mean, firstly, like, congratulations to him and his team for this acquisition. But that's, I think, why this was on our radar. We love their podcast, and I understand he's like having to leave that show, I think, in light of this.
That's my understanding. He's basically the founder of Deconstructor Fund. This is also his game studio, and he's basically having to step away from doing This Week in Games on the Deconstructor Fund due to becoming part of the Sony behemoth, which makes sense.
Mm.
But why would you acquire a game studio with no games? And this is actually a very clear answer. There's a lot of studios. This has actually been the number one thing we've been watching. Acquisitions are these giant publishing behemoths sucking up all the different small and medium-sized developers across the world, because they're trying to basically just in-house more and more of these development resources so they can crank out more and more of these products. And Sony has been signaling for quite some time they want to build out a development branch. They have resources allocated there. They have a bunch of publishing deals. They have a lot of really good first house IP. This makes sense strategically. I expect to see them continue to invest into development studios, whether it's through acquisition or building them out. I mean, Sony's got the money, and they've got the, I don't know, do I say the declining legacy business, just based on their last quarter's earnings, to continue to make these acquisitions. So it makes sense. One of the things to just note about Sony, not related, they're raising the price of the PS5. What do you think about that, huh?
Well, and I guess my other comment here is like I think this move does make sense. Obviously, even though it's a team without live product and market, it is a team of respected
pedigree.
industry
Yeah.
veterans, with a pedigree. And we're also friends with the folks in Sony's up and coming mobile division. They're putting together a pretty stacked team there.
Yep.
It makes sense that if you want to be serious about mobile publishing, that you want some really good high potential developers in house. So
Yeah.
I think
And
this is a play that makes sense, and I think we'll see more acquisitions like this.
when they've got the IP, I don't have the list in front of me, but their IP list, first IP is crazy. It's like there's so many IPs there that need to be ported to mobile, and each one of those products needs a focused development team. I would not imagine if they just spin out like 3 or 4 more of these deals just to get focused on all their different IP and getting out into the mobile audience. Cool. So that's it for the news this week. Kind of a varied group. We have some apps of the week. Warren, do you want to give us your app of the week?
Yeah, I'll give you my app of the week.
Great.
I've 1.5 apps of the week this week, Xander, since we have a little extra time. So one is just a follow-up actually to your last app of the week.
Oh God.
I was traveling again last week for a Upptic offsite, and on your recommendation, I downloaded Archero.
Oh
It's really
God.
fun.
Yeah, it's really
and
good.
it's really fun and an important box to check for me. A lot of my mobile gaming time these days seems to be when I'm on planes, and you can play it offline.
Right.
So I realized I couldn't play Diablo Immortal on the plane, so I played some Archero. It's an awesome little game.
It's a dangerous.
It's
a dangerous pit.
It is, yeah. But we already covered that one. So my real app of the week is Phantom Galaxies. So Phantom Galaxies, we're actually going to have one of their founders, Benjamin Lee, on the pod in two weeks from now. This is one of the games that I tell people to go check out when they're like, Web3 games aren't real games. They suck. They're not at the same quality bar. Blowfish Studios is the name of the studio, and Phantom Galaxies is a game I've been watching for a while they're in development. What is it? It's basically like a really in-depth space sim, a la Eve Online, with a lot of like economic simulations and MMO layers mixed with like a Gundam, like a spaceship transforming into mech battling action game. So it's a really cool universe that they've built out, where it's going to be the kind of game that you can kind of play your way if you want to be more focused on battling and space warfare. You can do that, or you can just play the marketplace and collect materials and try to essentially be a merchant in the universe. So it kind of also has like Wing Commander vibes to it. But the important thing is like you can actually play it and you can see the quality bar of this game. They have a really compelling demo and early level experience that you can kind of get a taste of all these different elements. And this is, to me, the first, either this or there's another game called Big Time I'll probably talk more about in the future. But even more so with Phantom Galaxies, where I feel like this is fully on the level of a AAA console and PC release, as far as the art style, the fluidity of gameplay, the depth of gameplay. And it makes sense because this is a team, Blowfish, that they didn't start as a Web3 team. They just started as a quote unquote like real game developer and have quite a bit of history there. And this is their first kind of built from the ground up project for Web3.
Yeah, it looks pretty cool. Warren, it's a PC client, right? So you're downloading something on PC. Okay, yeah. It's like one of my biggest pet peeves is Web3 games in the browser, because it's just such a crappy experience. But yeah, this looks cool. I mean, we'll see. I'll default to pessimistic now, but I mean, it looks really legit. They do this thing that
ambitious.
Triggers me, which is they're still selling stuff before the game's launched, but that's fine. It's fine. They look like at least they have real products. Yeah, but it looks like early access, game launch Q4 20. That's like now 2022. So
yeah, so we look forward to having Ben on the show when we have our Animoca partnership series of podcasts coming up, and check out the game.
Stay tuned. Yeah, it looks really cool.
Xander, what do you got this week?
So this is one I actually did recently, but it was at the end of a long podcast with a lot of content, and I sort of skimmed over it really quickly, and now it is live, and I want to just talk about it a little bit. So Side Pocket is a company made by a couple of my buddies from high school, and it is a asset management fund, sort of like how a hedge fund or like an ETF would manage your money for you, but it's done through an app. And the whole premise of this app is they're democratizing tactical investing. Tactical investing is a type of investing that hedge funds do, where basically they look at how the market goes overall, taking thousands of signals, and then based on the different strategy or goal, they will make micro adjustments to your portfolio on an ongoing basis. And this is different from like either actively managing your portfolio by saying, hey, I'm going to buy these stocks now and sell these stocks then, which is generally very hard to do unless you know what you're doing, or passive investing where you buy an ETF or a random stock and just hold it, never sell it, which is the Xander methodology. So what this basically does is it uses Apex Clearinghouse. So basically you just go, you plug in your bank account, click a couple buttons, it transfer monies over to Apex, which they hold for them, and then you pay them a small fee, and they do these. You put in a risk profile, and then they give you suggestions on what are the strategies you want to use. You click them, you move money over to that side pocket, which is their name for this sort of trading strategy, and then it will go and make the trades for you and manage the whole thing for you, and you just get some pretty simple reporting on how it's performing. You can do it on brokerage accounts. You can do it in an IRA. They are very, very new. If you go and download this, you're on the wait list. I think I'm the third person to use the product, but it's really, really, really cool. And it's my buddy, so I want to give a shout out to Danny and Morgan who are running it. And if you're interested in some more sophisticated trading strategies that you don't have to manage yourself, check out Side Pocket.
Yeah, we got to meet this team, or Xander introduced me to them a while back. Super smart team. This is one that I'm excited to try. So I mean, it's kind of like your own personal automated hedge fund manager, right?
Yeah, exactly. That's the idea, and it's much cheaper than basically any other like wealth advisor. They're under a percentage point. They have like a really cheap tier, which is if you're under $5,000 assets under management, it's like $3 a month, or it's like less than a percentage point if you're doing more than $5,000 a month. So check it out.
Awesome. We should have them on the show soon.
We should. That's a good idea. Yeah. Okay, that's the episode. No guest. But I want to hear from the audience, and here's why. We're thinking about changing up the format in the next couple months and for the next season for sure. And there are a few questions that we had that we're trying to get feedback on. One thing is, what sections do you like? Are you here for industry insights? Are you here for the interviews? What guests do you like? And just any other sort of general feedback for the show. apptalk@upptic.com would be a great place to email us. Hit us up at Upptic on Twitter. We monitor that closely. But just sort of a sneak peek, we're thinking about adjusting the show in a couple different ways. One is we'll probably start having recurring guests to help us with the industry insight section, which we can help sort of focus on the news on a more daily basis. And then separately from that, we're thinking about moving the interviews into more long form, 45-minute to hour-long interviews. We can really do a deep dive and really focus on those topics. So if that sounds interesting to you, if you think it's a terrible idea, let us know. We'd love to hear from you. Warren, any other thoughts about this?
Yeah, I think the other thing that we really want to hear from all of you is just what is the stuff that you like us to be covering, both for news and for guests. Do you come to us for kind of like getting a pulse on the game and tech industry, or do you come to us because Upptic is a company that's deep in the marketing space and you want kind of these growth marketing focused deep dives? We would, we see the data on it and can kind of infer some trends, but we would love to hear directly from all of you, both what you like and don't like that we cover now, and just what you think the show should be covering, because ultimately, we want this to be something that y'all enjoy listening to.
Awesome. Well, thanks for listening. More news and interviews next week. We got a really awesome suite of guests coming up. Warren, do you want to take us out?
Yeah, so as always, the pod was brought to you by the folks at Upptic. Here at Upptic, we do all things gaming and app growth. So this is both the tools and tech side with our Upptic platform, which is a really cool platform for predictive marketing analytics, managing creative workflows, automating app store optimization. And then we kind of have our little Upptic army of growth marketers of all different expertise that work with you as a game or app developer, as basically like a bolt-on growth marketing team to help with all of the complex interlocking puzzle pieces of bringing a game or app to market profitably. So basically, yeah, we're plumbers / therapists, and we love what we do. So if you need help with your game or app, feel free to reach out. We always love to talk and just meet founders working on really cool projects.
Awesome.
And you can reach us on the website. That's upptic.com with an extra P. It's upptic.com.
Awesome. Talk soon.